NVIDIA Corp, trading under the ticker symbol NVDA on the NASDAQ, is currently priced at $189.66 USD per share. This reflects an intraday increase of 3.19 USD, or a 1.71% move upward in today's trading session. While the broader market shows some hesitation, the momentum behind NVIDIA stock remains a central talking point for anyone using an individual brokerage or exploring various investing sites. The general expectation for NVIDIA stock has been a cooling-off period after the massive runs of the previous year. Many analysts suggested that the law of large numbers would eventually catch up and that the massive infrastructure build-out by hyperscalers would hit a plateau. However, the reality on the ground is looking very different. We are seeing a massive shift in how compute is being deployed, specifically with the full-scale global shipment of the Blackwell architecture. This is not just another hardware update, it is a fundamental change in the performance floor for data centers. While the market expected a transition period where growth might slow down, the actual demand for the high-density GB200 systems has created a backlog that extends well into the later half of the year. This tension between the expectation of a slowdown and the reality of accelerating demand is exactly why the price action today is so aggressive. If you look at the activity across platforms like Robinhood or Fidelity, the retail interest is not just holding steady, it is actually diversifying. People are moving from simple Robinhood stock trading to using more complex tools like the Fidelity trading platform or even setting up long-term positions in Fidelity IRAs. There's a sense among the smart crowd that the current valuation, while high by traditional metrics, is being supported by cash flows that are growing faster than the share price. On the institutional side, the data from Interactive Brokers and Fidelity Wealth Management shows that big funds are not exiting their positions. Instead, they are rebalancing, often using Fidelity ETFs or custom portfolios to maintain exposure to the semiconductor sector without over-leveraging on a single name. The movement we see today is driven largely by news surrounding the Blackwell Ultra B300 chips. The expectation was that these would be niche products for high-end research, but the reality is that companies like Microsoft and Meta are signaling they will take every single unit NVIDIA can produce. This has forced investors to rethink their position on NVIDIA stock compared to something like Tesla stock or Apple stock. While Apple stock has its own strengths in the consumer space, the enterprise-level dominance of NVIDIA is currently unmatched in terms of margin profile. We are seeing a lot of people who used to do their self-investing primarily in electric vehicles or consumer tech now shifting their focus toward the underlying infrastructure of the silicon world. For those using SoFi Invest or various online investment tools, the daily swings can feel overwhelming. But if you look at the institutional activity on the Interactive Brokers platform, you see a clear pattern of accumulation during any minor dips. This suggests that the big players are looking past the daily noise. They are focusing on the fact that the Blackwell architecture is delivering up to 30 times higher throughput for inference tasks. When you compare that to the expectations of the market just 6 months ago, you realize why the stock keeps defying gravity. The market expected linear growth, but the reality is looking more like a step function increase in capability. Comment below how many shares of NVIDIA stock you currently hold, or if you are waiting for a specific price point before you buy more. When you look at the historical context of the company, it started as a gaming-focused hardware firm. Most people who grew up with PCs know them for the GeForce cards, but the business model has fundamentally shifted. Today, the data center segment accounts for the vast majority of their revenue, hitting $57 billion in recent quarters. This transition from a hardware vendor to a platform provider is what has kept them ahead of the competition. While companies like AMD or Intel are trying to catch up, NVIDIA has built a moat not just through silicon, but through their CUDA software layer. This makes it incredibly difficult for a developer to switch to another platform. It's why you see so much investment help being sought regarding how to play the semiconductor space without getting burned by the volatility. Many people who start with online investing through the Robinhood app or SoFi Investing might not realize the scale of the automotive and robotics segments yet. While the data center is the current giant, the automotive revenue is starting to climb as autonomous vehicle systems become more sophisticated. We are seeing partnerships with companies like General Motors that go beyond just chips. They are using the Omniverse platform for digital twins and simulation. This is the part of the reality that many investors are missing because they are too focused on the quarterly data center numbers. They expect NVIDIA to be a one-trick pony, but the reality is a multi-pronged attack on several high-growth industries. If you are using a SoFi trading platform or Interactive Brokers stock trading, you might notice that the spreads and volumes on NVIDIA are some of the healthiest in the market. This liquidity is a sign of a mature, heavily traded asset that has become a staple of modern portfolios. Even conservative options like Schwab Intelligent Portfolios or Fidelity Robo-Advisor often have significant underlying exposure to this sector because it has become the engine of the S&P 500. The expectation was that the tech sector would become a drag on the index as interest rates fluctuated, but the reality is that the tech sector, and NVIDIA in particular, has provided the necessary cushion to keep the markets moving. Looking ahead, the catalysts are quite clear. We have the GTC conference coming up in March, where Jensen Huang is expected to provide more details on the Rubin platform. The expectation is some announcement, but the reality could be a much earlier production schedule than anticipated. If the supply chain partners like TSMC and Foxconn can continue to improve yields, we could see a massive surplus in free cash flow that might lead to even larger share buybacks or dividend increases. This is the kind of detail that separates someone just doing casual online investing from someone using Fidelity Brokerage or Interactive Brokers fees to manage a professional-grade portfolio. The risks, of course, are not absent. There is a constant tension between the demand for high-end chips and the geopolitical restrictions on exports. The market often panics at every news headline regarding trade barriers, expecting a total collapse in revenue. However, the reality has shown that NVIDIA is adept at navigating these waters, often creating specialized versions of their products to comply with regulations while still serving a massive global market. This resilience is a key part of the narrative that keeps long-term holders from hitting the sell button on their Robinhood investments or Fidelity mutual funds. As we wrap this up, the central takeaway is the massive gap between what the casual observer sees and what the data tells us. The observer sees a stock that has gone up a lot and expects a crash. The data sees a company that is fundamentally re-architecting how the world processes information. The expectation was that the AI build-out was a bubble, but the reality is a foundational shift in global infrastructure. Whether you were using SoFi ETFs, Robinhood fractional shares, or managing a complex account through Interactive Brokers trading, the story of NVIDIA is a study in how reality can consistently outperform even the most optimistic expectations. To summarize, we started the day with NVIDIA stock at 189.66 USD, showing a healthy move of 1.71%. We've seen how the Blackwell rollout is exceeding the expectations of the most bullish analysts, and how the institutional support through Fidelity Wealth Management and Interactive Brokers remains rock solid. We've compared the trajectory here to other giants like Tesla stock and Apple stock, noting that the enterprise demand for compute is currently the strongest force in the market. As you look at your own portfolio, whether it is through a SoFi active investing account or a traditional Fidelity brokerage account, keep an eye on that tension between market narrative and the actual shipment data. That is where the real opportunities lie. Disclaimer: I am not a financial advisor. This content is for informational and educational purposes only and does not constitute financial, investment, or legal advice. Investing in the stock market involves risk, and past performance is not indicative of future results. Always conduct your own research or consult with a qualified professional before making any investment decisions. If you found this breakdown helpful, don't forget to like the video, leave a comment with your thoughts, and subscribe for more market updates.